Hello and welcome to The Rate Stuff, your essential guide to all things mortgage. I'm Jack Izzard.
And I'm Peter Stimson.
Today we are looking at how the property market is pressing a giant pause button on the mortgage market.
Yes, unfortunately it's looking like 2026 could be a year to forget.
Yes, the demand for property is falling sharply, so it's really going to be a remo only year in terms of mortgages. Stay with us as we unpack what that means for you and for your customers. As much of the UK was sweltering in a heat wave in May, I'm afraid to say the property market was heading in the opposite direction. A bit of a deep freeze is starting to form. In fact, in April, the number of new buyers registering with estate agents fell by 34%, according to Rick. So that's obviously a lead indicator of demand for property. It is not a good place if you're seeing the number of buyers falling by a third. And we are kind of in danger now, Peter, of seeing this sort of vicious cycle where buyers just stay away as they see house prices begin to fall. So if we look at the house price data, the Land Registry, of course, compiles the official data on prices paid for properties. In March 25, March 26, zero change. So we've got absolutely flat, stagnant house price growth across the UK at the moment. Things are really bad for flats though. So over that 12-month period, the average flat in the UK fell in value by 5.3%. Several regional markets like London, Peter, just as bad, if not worse. I mean, It's not a good place. And of course, we've got this cycle where if buyers see property prices falling, they start thinking, I'm going to hold off. Why would I pay top dollar now? If I just sit it out, I can get $5,000, 10% off in the next year or so. So we've got a real concern in terms of demand for property there. And that's feeding into mortgages now as well.
It is. I mean, the market was looking very positive up until probably February. Then obviously the Iran wars kicked off. If we look at the swap chart going up now, what you'll see is the last 2 years of swaps data. And obviously 2 years ago, coming off the back of high interest rates, swaps falling down. We got to February and we were looking probably at interest rates coming down to sort of 3.25%, maybe even 3%. And they've kind of shot back to where they were almost 2 years ago. And that's created a lot of bad sentiment, a lot of bad feeling. Flats are a kind of a separate issue in their own right. Flats, you've had landlords kind of selling off the back of, the renters' rights bill. That's been going on for a while. A lot of, particularly the amateur landlords, dumping stock back into the market. There's been overbuilding of flats, particularly in some of the cities. If you go look at London in particular, 83% of developments in 2000 has been flats. So there's a concern there's been sort of too much stock built, particularly ubiquitous stock. And also coming off the back of COVID, a lot of people are kind of wanting some sort of outside space. So there's kind of an issue with flats and the perception of flats really. Dumping of stock, that kind of thing.
Yeah. Now we've got this glut of supply and just no demand, or not nearly enough demand. In fact, Peter and I, we're kind of nerds like this, but we were looking at the Land Reg data ahead of this. The average London flat now worth exactly the same as it was worth in 2019.
And that's an average, Jack. I mean, if you look at some of the London boroughs in detail, some of them haven't gone up since 2015. It's quite frightening.
So 6 years of stagnation.
And there is some reasons for that, which we'll cover in another section in a little bit.
Well, let's just look at the kind of link between property prices, demand, and mortgages. So we've got this kind of this unpleasant confluence of factors where it costs more to borrow, property prices are falling, demand is just not there from buyers. There's a glut of supply. So that's driving down prices. It's driving down demand for mortgages. And of course, the new mortgage lending from the Bank of England data, that was a bit of a shocker, wasn't it? So we got the April data recently, which showed that April lending was 4.4 billion. That's down from 6.8 billion lending in March. So a big drop-off in lending. Now, those figures do vary a bit month to month, but previously the 6-month average was 5.1 billion a month. So big drop-off in lending there. Ray of light time, though. So if we're seeing demand for new lending fall off a cliff, remortgages, that's more protected, isn't it? It's pretty inelastic when you're talking about demand for remortgages.
It is. You've got 1.8 million fixed rates coming to an end this year. Glass half empty is they're obviously going to be coming on to probably higher rates than they came off on. So a lot of them are kind of probably going to be experiencing some form of rate shock. They're going to need a good broker to kind of talk them through the options and find the best product for them. Other sort of ray of light possibly is first-time buyers out there. Prices are falling. You're talking about flats going down an average of 5%. They've gone down a lot more in some areas, I can tell you. So, first-time buyers can grab themselves a bargain from, distressed landlords selling or just distressed sellers selling. And it's not all doom and gloom. If you are selling your property and you have to sell maybe at a bit of a discount, perhaps the next one you can buy at a bit of a discount. So, there is swings and roundabouts in some of this. So, whilst the market on the purchase side is probably going to be quite a bit down in 2026, if you're a savvy buyer, you can pick up a bargain or two.
Yeah. Here's a buyer's market, and as you say, the remortgage market, that we think is going to stay strong for this year.
Yep.
But for that question of where does the property market go from here and how long does the deep freeze last, well, stay with us as we unpack what that means for you and for your borrowers. So it's a bit like a giant finger has descended and pressed the pause button on the property market and also the mortgage market. So where do we go from here? How long do we stay in this holding pattern? Let's look at property first of all, Peter.
Yep.
Obviously, we've talked about demand and supply, the imbalance there between this glut of supply and pretty weak demand. Prices probably going to fall as a result of that, you think?
Yes, it's looking like it. Savills predicting minus 2% for this year. But obviously it's going to vary according to property type and location. So, flats are probably going to get hit a bit harder. So yeah, depending very much where you live, I suspect.
Okay. And of course, falling property prices long term, good news, because that will fire demand. But in the short term, there is a danger that buyers will just kind of hold off and wait until things settle down. So not a great driver of demand there. What do we need though to kind of break this cycle, to get out of this kind of stagnation patch that we're going through?
It's difficult. There's three real things to fix this, and it's challenging. We've done some analysis, kind of looking at how do you get property price growth, particularly in London. London, we go back to 2000 and looking at all the sort of the growth from 2000. We looked at kind of average salaries, top quartile. Looking at interest rates during that period and looking at how much property prices have grown. And there really isn't much headroom for prices to grow anymore. So you really need either interest rates to drop, salaries to increase, or property prices to go down. Now, how do we resolve this at the moment? Well, first of all, got to fix the Iran war.
Okay, yes. So check one off the checklist.
Yeah, world peace. Yep. Yeah. Number two, off the back of that, obviously the inflation's going to come into the system through higher oil prices and all the associated, goods and things off the back of that. So inflation to wash through the system.
Yes, and you were saying last time we met that you think there's a reasonable chance, or at least all things being equal, that inflation will be quite short-lived. It'll kind of wash through and we kind of go back to normal fairly quickly.
Yeah, so you're looking at inflation sort of back end of 2026, maybe early part of 2027. Hopefully the Bank of England hold off increasing interest rates. So maybe we stay at 3.75, maybe go to 4%. So interest rates, stay under control, and the swap curve maybe starts to come down a little bit. And then obviously come sort of this point maybe next year, we maybe see interest rates start to come down again. And off the back of that, depending where inflation comes down to, hopefully we can kind of see interest rates maybe down at 3.25%, maybe even down to 3%.
Okay.
So that's kind of where we need to see it. But essentially, you're looking at three things that really drive, house prices potentially going up. That's either higher wages, lower interest rates, or lower house prices.
They all sound great taken together. I'm conscious, though, that what you've given me there is kind of a big wish list.
So I'm kind of optimistic for 2027 in the sense that we get lower interest rates. We're coming off a lower base for house prices. And if you think what customers actually really want in order to buy, they don't necessarily want house prices racing away. Yeah. They just want to buy with some stability. They want to buy knowing that when they sell in sort of 3, 5, 7 years' time, the house is probably going to be worth more than they bought it for.
Yeah.
So they want that kind of stability. And if we go into a sort of a low interest, reasonably low rate interest rate environment, they should get that. So, we don't really want long-term house prices really going up much more than inflation or wages. We don't want this sort of soar away sort of house price inflation that we got through the sort of the noughties and through sort of year 2010.
The 2010s as well.
Exactly.
Yeah.
You kind of want stability. And that's kind of what we hopefully will get with the market from sort of, 2027 thereon. So if we can kind of get a market that starts to look like that from 2027 onwards, that should allow people to buy with confidence, offer a decent, reasonably priced housing market from therein.
Now, are you saying this is what you want to happen or what you think is going to happen?
It's a little bit of both. What I want to happen, but what I'm hoping happens as well. Right. The other thing I'm hoping happens, and this is probably a bit more hope rather than what I think is going to happen, is somebody sees some sense somewhere in Downing Street and does something with stamp duty.
Right.
This has been talked about enough. It's a tax on moving. It's a tax on buying. People are paying tens of thousands of pounds, hundreds of thousands in some instances, just to buy a house. It stops downsizing. It stops people moving up the chain. It's ridiculous.
Yeah, it's also a lever that politicians can't resist fiddling with.
Oh, I know.
And you get all these kind of distortions in the market when they do that. It's very unhealthy.
Well, we got one with Rishi Sunak after, COVID, put a distortion into the market, which is, again, distorted house prices now, even to some extent. Just put an annual property tax on. It's much fairer. Link it in with, council tax. Much easier, much fairer. I know it's Conservative Party policy.
Well, you make a good case. I think Kemi Badenoch is ready for you on line 2.
Yeah, exactly.
You've certainly made the case very strongly there. Okay, but in terms of your wish list, I think that's sounding quite optimistic and also quite achievable. So let's just summarise. So 2026 is kind of a year to forget, a year of
It's a reset year. Yeah. It's a year where things didn't quite work out, but 2026 is not going to be great, but that means 2027 you're starting from a much better lower base, and rates will be coming back off the other side and coming down.
Okay, yeah. So kind of batten down the hatches of 2026. A brighter future could be within reach in 2027.
Yep.
And let's just go back to a couple of positives for this year. Plenty of action on the remo market.
Yep.
So there might not be an awful lot of first-time buyers for the moment,
but
there'll be lots of remortgaging. You said 1.8 million people.
Yeah, and grab yourself a bargain.
Well, yes, first-time buyers. It is a buyer's market out there. And then, of course, the thing that would be the absolute double cherry on the cake for 2026, England winning the World Cup. We can dream, Peter.
Unless you're Scottish.
Well, Scottish or Welsh. So apologies to our viewers outside England, but we're hoping for that at least for football. But in terms of the property market, yes, a bit of calm, a bit of sense returning to the market.
Yes, absolutely.
I've been Jack Izzard.
I've been Peter Stimson.
And you've been watching The Rate Stuff. Do join us next time.